Hi, and welcome back to Stock Talk. This is Joe Rabel with Rabel Stock Research. So, got some interesting stocks to talk about this week that came through in the requests. But I do want to spend a few minutes talking about MACD and maybe give you a little bit deeper understanding as to what's really going on with MACD, especially when we look at it in multiple time frames. And then I want to show one of my specific patterns from my book that I think is a very powerful tool when combined with the single moving average, the 18MA. So let's go ahead and get into this agenda. So I want to talk about MACD. I want to use it in terms of improving your tactics for timing. I mean, this is all about improving timing, really, and that's how we can use MACD from that standpoint. So we want to do that. And again, if you get an understanding of how there's confluence in multiple time frames, I think it'll really help you, because most people, I think, don't really understand how multiple time frame analysis works. I want to get into that a little bit, and then we're going to go through the stock requests that came through. So let's go ahead and get into this lesson now. Okay, so I've got a chart of Rockwell Automation up, ROK, a weekly chart on the left and a daily chart on the right. And what I want to talk about here is getting an understanding of MACD. So if we look at this decline here and this drop, and we see that the MACD crosses down below the zero line, that's a big negative. And when we look at it just in these terms here, with just the MACD line, it doesn't necessarily look that overdone on the downside. But you can see from a price standpoint, we've gotten a little stretched away, and it's hard to tell, is this going to keep dropping, or is this going to check back, or what? So what I like to do is, after I see a drop like this, I look for a little 2 to 3 bar drift or rally off of this to get the MACD line to actually lift off a little bit. Now, what is actually taking place on the daily chart on MACD, while this is just starting to lift off, it's actually right here where the MACD line is crossing back above its signal line after getting stretched away from the zero line. So we get stretched away on the downside. We know we're kind of overdone. And then the MACD line crosses back above its signal line and works its way back to the zero line. What's taking place here on this time frame is causing this line to rally up a little bit. And then as long as we stay below this signal line on this time frame, we know that the main trend is down. And now we're looking for an entry on this time frame. So as we turn down, you cross over. Now, sometimes the crossover is a really timely signal, and other times you get an entry after 3 to 4 days down. So what I noticed when I started looking at this in multiple time frames was that you had to have an alternative entry. Sometimes the crossover is really timely, and it'll get you in right as it's crossing, just a day or two down off the high, right as it's crossing either a trend line or the 18. And those are good signals. But when I see it down 3 or 4 days, 5 days in a row, something like that, and then we get the crossover confirmation, I'm usually watching for the next rally. Now, the key thing is that we're rallying to a declining 18 week on this side. And that's obviously a rally towards that line is a big negative. What I'd like to be able to do is combine the two and say, okay, let me get a rally to a declining 18 on the daily chart now. And so this essentially is this pinch pattern where we're pinching in towards the signal line here, and it's rallying up towards the 18 week. And so I call this a pinch play. If we get two higher bottoms on the price pattern and the MACD pinches in towards the signal line a little bit, then we have this pinch in place. What I like to do is look for that in 2 consecutive time frames. And in this case, we got the exact same pattern right here and with this pinch right here. And in fact, it happened back-to-back times. We had one that was there and then another one right here, another pinch here with 2 higher lows right there. And that happened after the main trend line break. So there were a couple different entry points using this, but the timing of these tools gives you exact levels of where to look. I'm essentially just waiting for the prior low to be taken out as a trigger on the short side after it's come back towards the 18, after it's pinched in, and we have 2 higher bottoms. So by using this in multiple time frames and really having an understanding that this is not a good entry for multiple reasons. we can see this has made a pretty big move. And in order to get a little bit better price point, we want to get a little bit of a rally in MACD, and that's essentially the lower time frame working its way back to zero after crossing back above its signal line. So I think this is a pretty powerful way to look at MACD from that standpoint. Let's fast forward to what's taking place right now, because I think there's a key distinction here. We've got the same kind of pullback here, and notice how MACD is holding its signal line. Right now, but the difference here is that instead of staying below, like this was well below the 18, this actually on the pullback had a lot of overrun of the 18, number one. Number two, this is all happening below the zero line, where this was a negative pattern below the zero line, which is a good sign of strength. This is actually taking place below the zero line, so it's trying to reverse its trend. It hasn't completely reversed its trend yet. So, in this case, we do, by letter of the law, this bar right here is a signal because we have this MACD holding, we got a little pinch developed, and we have the 2-bar pullback. But notice how the 18 is declining here, okay? And because there's overrun, because this is happening below the zero line, because we really don't have green DI confirming yet, you know, I would wait for the second pinch, which took place with the 18 rising underneath. Really easy to see the pinch play that developed here, and then look to take advantage to the upside. So I think if you understand the way this is playing out and you understand how to use the 18, so we're looking for pullbacks, in this case, to rising 18s. Now, this had some overrun, so we waited for a little confirmation, and by doing that, we get a trigger while this is back above it's 18 on this time frame, turning back up on this time frame. So we have confluence amongst the two time frames, even though the patterns aren't identical. And so, you know, again, it has to do with this understanding of how multiple time frames are working together, as opposed to looking alike. And if you get an idea of the different MACD combinations that you're looking for, I think this can be pretty powerful. Now, in this instance, we're looking for the same pattern in two time frames back to back, but the way they develop is a little bit different. Always look for the higher time frame pattern first, and then do the lower time frame pattern second. In other words, look for the lower time frame pattern after that. All right. Hope this is helpful. Go ahead. Let's go ahead and look at some individual stocks now. Just briefly, my services can be found at rabelstockresearch.com. The individual package has about 2 to 3 reports each week, plus a special video for that package. Also, I just want to make mention that the coupon code is only going to be good. The discount is only going to be good probably for the next month. So just to make you aware. So check it out at rabelstockresearch.com. Let's go ahead and get into the stocks now. I'm going to start out with the S&P 500 chart. I've got my monthly on the bottom left, weekly in the bottom right, and then daily in the upper right. Now, when I did the lesson, I wasn't expecting there to be so much overlap in the thought process, but as it turns out, there's, I think if we stay on this same concept of what I was talking about in MACD, let's just look at the weekly chart of this S&P. So we made a lower low and came down to 3,500 support, which is the 50% retracement of this entire move. But we had momentum divergence in place because MACD did not hit a new low. But also notice the distance between, see how the MACD line got stretched away from its signal line as well. We had a little bit of separation there. So a lot of times when you see that, you expect to see this retrace back a little, right? So if we look at that, look at what's taken place on the daily chart. We had a move just similar to what I was showing in the lesson, where the MACD got stretched away and then we crossed over, and now we've been working off the oversold condition by working our way back to the zero line. Now, one of the things I want to make sure I explain here is when I see divergence like this, most of the time I'm sort of expecting this to cross over and maybe get a little bit better move potentially. But what I do is, as this moves up, what we want to do is key on this zero line area. So I know the MACD is above its signal line. However, we always want to key on these areas around the zero line to see if there's a signal developing, even when it fails at the zero line. So if it doesn't make it there and turns down, that's significant. If we cross over, that's significant. And we crossed over here, and now we're trying to cross over again here, but it's not confirmed yet. And one thing that's kind of bugging me is the fact that green DI could never get above 25 here. So we made this move off the low, a pretty strong move, but green DI couldn't really show any significant strength. So what I've been saying to my subscribers is, look, we don't know if this is just going to be a pullback and move higher, which is actually what I was anticipating. I was expecting this to pull back and then move to a new high. And it still could be, because we haven't broken, the MACD has not broken its signal line. It hasn't reversed back down through the zero line. But it's weakened this move somewhat because of these 2 days down. I don't think it can be a straight move up. It could survive and consolidate here and then maybe make a move to the upside if it can survive. But because we're back to the zero line, because we don't have green DI showing strength with a move above 25, we have to give this the potential for a setup that is reversing back to the downside again. So, I mean, this is going to play out one of two ways. Either this is going to survive, it's going to push up, probably hit some resistance, come back down, and then turn up. Or it's going to have a little bit more downside follow through, and then it's going to rally up in the form of like a 1, 2, 3, where we break the trend line, we rally up and test, and then we come back down this way. And if that happens, we're going to have a clear zero line reversal. We probably have red DI showing a little bit more strength, and we'll never get above the 18-week. So one of the things I do want to point out real quick, if you look at this, you see how we failed at the 18-month line right there at this peak and then pulled back to 3,500. Well, 3,500 is the quarterly MA, 18 MA. All right. So we peaked at the 18-month line, came down and found support at the quarterly 18. And then we rallied up just recently to the 18-week. And now we're testing the 18-day. So the question is this 18-day going to hold or not? If it doesn't hold and we can't turn it around, then we have to kind of assume that the 18-week is still in control. And the divergence, all it was doing was working itself back to that moving average and not really looking for anything more significant. Anyway, I think this is the way to use MACD to really help you. We're at a critical point. It's not convincing one way or another yet, although the recent price action, I think, hurts the uptrend that we've had in place. Let's go ahead and look at the first request that came through. So this is a high yield corporate bond fund, and we've got this pattern again where we've made a lower low in price on the weekly and MACD is making a higher low. And then look at what just happened. It reversed its way back down. Now, one of the things that I think is more negative about this is that these two lines stayed declining. The S&P 18 started to flatten, which had me thinking that we could rally a little bit better. But Jay Powell had other things in mind. So we've got this decline and this declining, and we came back down to basically this is trend resistance because we've rallied back down right back up to that 18 MA. And now we're getting this ABC rally to the upside that looks like it's failing. I still would probably want to see a little bit more confirmed evidence, but we have low ADX and a MACD right at the zero line. So it's very possible this could just start another move to the downside right here, right now. So the trend is down. There's nothing to be all that excited about. We had divergence, but it was in a bear trend where all the moving averages were declining. So not as appealing to me as even as a divergence play, other than the quick rally back up, which we saw. Okay, HAFC. So I like this pattern. I think, you know, we held the 18-month, trying to lift off. Overall pattern looks pretty good. We actually came back to the 18-week and tried to lift off. And then look at how we found support at the 18-day. So overall, I mean, I would say that this pattern right here, right at this level, you had support from the 18 month, support from the 18 week, and then support from the 18 day. I think that's a pretty good trade right there. Now, this might have had earnings. I don't know if that was the case, but now it's pulling back, and we have to see if this can hold the 18-day line. If it doesn't, then you have to sort of assume that we're back into kind of a trading range again. I don't think it wants to fall apart. I think what it might do is just stay contained in this sideways range. That's what I'd be looking for. But the sellers are not strong here. It's more of a question of, you know, how long it goes sideways. I don't think it really wants to break down below these lows here. Travel centers. So when this was requested, it hadn't gapped down yet. So we now have a pretty big problem area that has developed. We can see that on the monthly and the weekly. You see how it was rallying up, and it was in the area of this prior high. Again, so same guy kind of brought this up. I mean, we had strong ADX on this time frame, strong ADX on this time frame. We had a pinch developing here. We had a low ADX condition. But one of the things, so we had the zero line reversal with low ADX. So if you're going to play something like this, you probably have to do it like this. You have to get in here. And then if you make a move to the upside, and this is kind of the way I've been suggesting people do it, is take partial profits here and go to a break even. Now, you wouldn't have gotten the break even price, but I don't think you would have lost a whole lot if you played out that way. You'd have been stopped out right in the open of this decline, and you'd have taken a small profit here that would have reduced your risk, and then you know, so yeah, you would have lost a little bit, but it really wouldn't have been that bad. And I think that's how you have to handle this market right now. It's just not allowing things to really get going in a big way. So right now, you just have to be a little bit more careful about your risk management. Okay, so Titan pulled back deep on the monthly and then rallied back up. So when I see this pattern, you know, obviously I'm looking for a retrace, and that's what we got. We found support right at the 18-week, right here at the 18-week, and we had a pinch play develop on this time frame. Now, on this time frame, it was a little bit different. We had this trend line in place, but we had overrun on this time frame. Whenever I see overrun, I look for a little bit more confirmation. Probably would looked at this as this entry here, which is later. But remember, I'm looking for low risk. I'm not looking for low price. Okay, and I hope you understand that sometimes if you're waiting for a low risk entry, you pay a higher price, but it is lower risk, because if this turns up here and triggers here, I can put a stop here, and I can actually take a target at 1-to-1, meaning if this is one risk unit, I'm making one risk unit here, and then I can go to a break even, and I'm still in this trade potentially if I entered on the pinch play entry. And if it takes out this low or takes out this level, then I'd be stopped out at a break even on the balance. And again, I think we're in an environment where that's kind of how you have to handle this right now. So these are not bad trades. The person who sent these over, I kind of like what you're thinking and how you're but how you're handling these, I think, is the difference right now. We're in a bear market. It's still a bear market, and we have to assume that we're in a bear market until things really switch on the weekly and the monthly. So WSO, so here's a flat 18-month line, okay? We don't have a trend on the monthly. It's more neutral. And notice how we failed at the 300 level, okay? That's kind of a key thing, not to mention the fact that we did it again up here and we came up. So I know 300 is kind of a problem area, and now I know I've got this 18-month that's kind of flat. And then I go here and look at what's been happening. So we started breaking the 18-week here, and then we broke it back above it, and then broke below it, and then broke above it, and then broke below it, and then broke above it, and then broke below. I mean, look, the 18 is not acting as support or resistance. That is telling us a lot. It's telling us a lot. This is not a strong trend in this time frame. There's no respect for the 18. If the 18 does not have respect, then we really can't trade this right now unless we want to play from support to resistance. And I mean, that is a possibility. You have to go down the smaller time frames to do that. But that's about all we have right now. So don't get too caught up and playing like a 1, 2, 3 reversal unless you're just looking for a move back up to 300. And if you're going to do that, you got to really watch how much you're risking to make it worth your while. Okay, so Costco. So we've got this pattern in Costco where we've made a lower high and now we're trying to make a higher low. We're kind of caught in a wedge. And so first thing is we still have a rising 18-month line, but we have a flat 18-week. So this time frame is pretty neutral. Both 18 and 40 are flat. We're going to need to see a move in either direction out of this wedge to kind of give us some sign before I would do anything. So I wouldn't go looking at the smaller time frame until I see something going on here, like coming out of this area. Otherwise, unless again, if you want to trade. I mean, if you want to trade off the daily and the hourly or something like that, you could do that inside this wedge. But other than that, I don't think there's anything to do until we break out of that wedge. McDonald's. So really nice breakout. In a bear market, what I tell my subscribers is in a bear market, I don't really want to buy breakouts. Okay, I mean, breakouts are subject to failure in bear markets, especially ones where you're coming from way down here and trying to break out after a pretty substantial move. I mean, you see how we started here, went straight up, and then this is the breakout level. I mean, you're definitely overbought on the breakout. When you're overbought on a breakout, expect a pullback. Now, what I like to do is let it pull back and form a higher low. You know, come back to the 18 and then turn up. Show signs that it's turning to the upside again. If that happens in this chart, I think this would look pretty attractive. So we want to keep an eye on that. I mean, the reason why this is appealing to me, especially for someone who's a professional money manager, look at what this is doing on a relative basis. It's basically been going up the whole year. This has been a great stock on a relative basis. Now, it doesn't mean it's going to make you a whole lot of money, but it's a place where you can be where you're not really being affected by the general market, at least not yet. Okay, ITW is trying to turn the corner, but it's got a big issue right here. And you can really see this green line is the 18-month line overlaid on the weekly. You see this? You see how it's rallying up to this 18-month, and we have this prior pivot high up here. That's a really key level. There's really not a whole lot to do until we can get through that line. Now, it's worth noting and watching because of what's going on a relative basis. I mean, this is pretty intriguing, but I think what I would prefer is to see this push up through these lines and then maybe look to buy the first pullback. So make this go up, make this show a little bit more strength, maybe even get through the zero line, and then look to buy the first pullback. CNC, nice move off the low with the vertical move off the bottom, and that's showing there is a lot of support in place. But I think based on the way this is played out, there's just too much resistance at 90. I think this is caught in a range right now. Even though we're holding the 18-month line, which is rising, I expect this to channel for now with resistance starting probably right around 90. Okay, so this is an interesting one because it was a question on the short trade. So I want to address this in a couple of different ways. So number one, if I'm looking at a short, I have to look at it in the context of the whole picture, okay, in terms of the entire picture. So I'm going to start with the monthly, and I want to see what is going on. So yes, I know I'm only looking for maybe a little trade here, but if you notice, this had come down to a major support area. So we're into this big support zone, number one. Number two, look at what happened on the weekly chart. We had a down move and a signal, down move and a signal. All these signals where we're failing at the 18. Look at how many times this has failed at the 18, right? I mean, even that was another one. So that's 4 or 5 times where we failed at the 18. So this time we didn't get there, but I want to explain that I typically am looking to play the first 2. Sometimes I'll play 3. As long as these have a parallel look to it, I do want to keep playing it. But once I get beyond 3, I get a little nervous. I know this still has a parallel look, and I know, the path of least resistance here is to the downside. But remember, we're coming into bigger support, number one. Now, here's the clincher for me that makes this a little bit troubling as a short play. So you need to understand the concept of climax. So look at the ADX, ADX, strong ADX, strong ADX, strong ADX, and then the ADX starts to weaken a little bit, even though we're going to new lows. weakened even more. So I have this sort of divergence in place potentially in the ADX, but it never kicks in. It never kicks in a reversal. And then we get one more big decline. So after a divergence, if you get one more big move, and notice how this is the biggest move in the entire decline, I'm leaning towards this being a climax now. This looks like a climax to me. With that said, if you wanted to trade this for a move just down to test these lows, yes, you could do that. The problem is now we're kind of triggering right now, I want to make sure I cover the details real quick, that you broke the trend line, you tested the high, and now coming back through that low. I do agree with the assessment that you have, but we got a big green bar down here and all the reasons I'm stating. So I'd be a little bit careful. You'd have to be pretty nimble to play this. And I'd probably try and find something that has a little bit more bigger picture room. That's all the time we have today. Thanks for watching. My contact information is listed. And if you have a stock request, send it to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey, Grayson Rose here with Stock Charts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.